I am more than pleased to introduce our moderator for today, Walid Mansour. So I'll give a really small introduction on Walid, and then I'll hand it over to you. Walid's deep involvement in the VC and technology ecosystem in the MENA region date back to the mid-2000s. Since 2005, Walid has been intimately involved in this transformational entrepreneurial story by participating in the setup, scale up, and exit of several VC funds and technology companies. Previously, he was a managing partner and CIO at MEVP. He also serves as a board member and advisor to many successful internet and technology companies regionally and globally. Walid has previously worked in public policy, strategy consulting, and industrial and software engineering. So without further ado, Walid, I'll hand over to you.
Thank you, Fiza, and thank you everyone for coming to this session this afternoon. We have a fantastic panel today, and we will try to tackle the stories and the whole NFT, blockchain, Bitcoin industry as it unfolds before our eyes. It's exciting times to be involved in those new technologies, new applications. What I suggest to do is to give our esteemed panelists a 2-minute interview to present themselves, their names, their companies, their areas of interest. And we will, right after, go for a short poll to ask the attendees a couple of questions and get the session going. I would like to start with my dear friend Ibertus as a first, if you can present yourself in 2 minutes.
Yes, sure. So hi, everybody. Welcome. Thank you, Walid. Hubertus Stonehouse is my name. I'm based in Dubai, originally from Vienna, Austria. I'm running a family office-backed VC firm here in Dubai, which also has a presence in the US called Enabling Future. We invest in tech companies, mainly around fintech, marketplaces, food tech, and blockchain. Roughly 30% of our portfolio is in layer 1 solutions in blockchain, crypto infrastructure, custodians, and different infrastructure layers that make the blockchain viable. How I got into the space was because it's a funny story, because somebody owed me money in Switzerland back in the years, and he asked me if he can repay me in Bitcoin, and I accepted it, not knowing what it is. Then I got excited about it, I learned about it, and I got involved very early in various layer 1 protocols, and that's the whole story. Currently, I'm also involved more operationally as the chairman of the foundation board from the Tezos Foundation, which occupies a certain period of my time. And before that, I was a co-founder of a mobile games company here in the region called Babil Games, which was the first mobile games company with Arabic content out of Dubai and Amman, which was then acquired by Stillfront, a Nasdaq-listed company. So I'm happy to be on the panel.
Thank you, Bertus. Sandeep, would you mind please present in 2 minutes time presenting yourself and your company?
Sure, absolutely. So I got involved in crypto in 2014 because I co-founded India's first and then largest crypto exchange, Bitcoin crypto exchange. I exited the exchange about 2 years back. I sold the exchange. During that period, I was also formed the Crypto Industry Association in India, and I was a president, and during that period of time, represented the industry to various government committees looking at regulating the space in India. I currently serve as an advisory role to the association. Currently, I'm managing my family office investments primarily in Bitcoin and Bitcoin-related companies. I'm based now in Singapore. I'm a member of IPO Singapore. And I'm really passionate about talking about Bitcoin and educating people about Bitcoin. And so I started an initiative called bitcoinmastery.org last year. And I'm happy to be on the panel. Thank you, Walid, for having me.
Thank you, Sandeep. Blair? the floor is yours.
Thank you. So, yeah, hello everyone. My name is Blair Halliday, so I'm the head of UK at Gemini. In terms of kind of my background, I'd previously worked at the NatWest Group based in the UK in a variety of financial crime and risk-related roles, and then moving on to more kind of fintechy companies after that, and a variety of senior leadership roles around that space, before transitioning to crypto in 2018. And I joined Gemini in 2020, just in time for COVID. And about Gemini, Gemini is a crypto exchange and custodian based initially in New York, founded in 2014 by Tyler and Cameron Winklevoss. The UK was Gemini's first foray internationally outside of the US, and we also have offices now in Singapore and Dublin. But in the UK, Gemini is one of, or I should say, two of, because we have two of these companies, of only 6 firms that have received approval as a registered crypto asset firm under the UK's Fifth Money Laundering Directive regime. Gemini as a company was founded with a vision of creating a safe, vibrant and secure place for people to transact in and commence their crypto journey, with a really strong focus on regulation, both in obtaining licensing and also working with the regulators to create trust in crypto. And we have a really strong vision that crypto really has an important part to play in the future of financial markets and systems globally. And the evolution towards that is evidenced by the growing interest globally from consumers, institutions, and regulators alike.
Thank you. To cover in a lot of areas we could delve into. Before we go into it, I suggest to have a quick poll. 2 questions. Would appreciate if you answered these questions. We'll give you a minute. And my colleague Fiza, will you be able to please publish the results once you have them?
Yeah, we'll just run it for a minute and then publish it.
Thank you. Subject that's been in the news lately, and this is another application of how blockchain protocols and crypto expanded into the digital assets world. I'd like if you can give us if you try to simplify for us, what is an NFT? What does it mean? How does it work? And to get a sense of you being also the one of the founders of the Tezos protocol, to see how you can actually rely a business application under in an NFT, and how does the pipes look below under it? So if you can help us shed some light on that.
Yeah, absolutely. So first of all, thank you for the credit, which I don't want to take. I'm not one of the founders of the Tezos protocol. I'm one of the first investors. The founders are way smarter. They're way smarter than me, and they are sitting probably not in the audience. No, I'm happy to explain this to you. So an NFT is substantially, think of it like the digital representation of intellectual property on the blockchain. That's in simple words and hopefully not too technical what it really is. So it's just to give you an example, you can use some digital content like a unique piece of music, and you can basically wrap the proof of origin of this music and hash it on a blockchain, and wrap this in a smart contract and put it on a blockchain basically, and make it with all these features that a blockchain have, make it immutable, auditable, make it basically secure and distributed and available in a secure format. That's the more technical way to describe it. The practical use of the NFTs goes obviously very wide. And I believe, contrary to a lot of other applications that we've seen in blockchain in the last couple of years, NFTs have probably the potential to bring blockchain a little bit more to the mainstream. So I think everybody who is a collector in the audience has probably heard about the famous Panini photo stickers that we used to collect as children. Even I remember that around football championships and these kind of things. And basically the same concept you could think about is now happening in the digital space. You have unique representations of content. This can be real stuff that is represented on the blockchain. It can also be some digital content that is uniquely represented. And the practical applications of NFTs is really that people can use these digital pieces to trade them, to collect them. So if you're a collector, you will probably understand NFT, the concept, easier, as if collection doesn't make any sense to you from the outset, because many people say, okay, why do I need NFTs? And then if you dig deeper, you understand these are people who don't even understand, why do you collect what you collect, you need to take in very simplistic words. And obviously there are a lot of caveats and features to it.
I see. I love the collection, Panini collection analogy. It's as we move into the metaverse and into a second life and a more digital parallel worlds, I guess we're going to be taking some of our old habits with us when it comes to collecting assets, and that's what all these technologies provide. They really provide a whole new universe and all new possibilities to interact in the cloud. But can you tell us a bit more, if I can build on that point, on how does that affect, say, the world of finance? If we would want to talk about DeFi, for instance, maybe just get us, make us understand where this world is going.
So NFTs is one thing. DeFi is a different beast, if you want. Decentralized finance is basically came out of the Ethereum community, and it's was invented in order to create value on top of the Ethereum tokens, which were sitting around. And the concept is that you can actually create a peer-to-peer layer that removes a lot of the gatekeeping functions that today's financial system has. So think about borrowing, lending, market making, exchanges. Everywhere you have gatekeepers sitting and a lot of transaction fees occurring. I think roughly 30% of the GDP of the entire banking system is actually just so-called, let's say, fees, and you can call it from the blockchain point of view, unproductive value, which is kind of wasted. So if in theory everything would sit on code and notary functions, for instance, as well, if everything would be executed by secure distributed networks, this is what a blockchain protocol ultimately is. It's basically distributed ledger. It's a distributed bookkeeping in very simplistic words. Then obviously you could remove a lot of friction. You could create way more efficiency, and you could make everything cheaper. And the beauty about the concept of decentralized finance, which currently works only in the cryptocurrency space, so it's not yet linked to the fiat system fully functionally for different reasons we can come back to later. But the beauty about it is that if you think about the fact that, I don't know, but I think 30 or 40% of the world's population is actually unbanked, or probably even more in some parts of the world. And this is not because the banks are lazy not to find these people, but simply because the compliance costs of the banking system have increased so much that it's not viable anymore for retail banks to offer banking services to a certain set of our population. And that creates huge social imbalances and huge frictions. So decentralized finance could solve that if operated in a compliant, regulatory compliant way, by basically giving these people or this segment of our population access to financial services in a very direct, peer-to-peer, cheap and efficient way. But you have to say, it's still at the very early stages. It's a thought model at the moment, but it's gaining rapid traction. And just to give you a number, currently we have, I think the last number I've seen is over $50 billion locked up in decentralized finance. Before the pandemic, it was, I think it was not even 2 billion. So it's growing exponentially.
Interesting. I like these numbers, and we'll come back to that later as examples of future applications. Would love to hear your thoughts on how do you vision the future in 5 to 10 years. Speaking of gateway keepers, and I'd like to address the point with Blair with regards to the ecosystem providers, let's call them, whether they're custodians, regulators, or everyone who actually from the, let's call it real economy, who plays a role at either regulating or increasing the level of maturity or increasing transparency in this sector. So what are kind of your thoughts on the maturity, first of all, the maturity level of those building blocks, whether they're regulators, governments, central banks, custodians, participants, agents, and how do you see that evolution happening as we speak? Because it seems to me that there is a tremendous injection of capital in that space that has accelerated over the past few months. And I'm thinking of some investments even in the metaverse, which is even crazier than that. So would love to hear your thoughts on the maturity of the ecosystem players.
Yeah, sure. So look, I mean, in terms of that, I mean, it does kind of, it all boils down to regulation in one form or another. But when it comes to regulation, you know, when it's done right, it can help to pave the way to healthy and sustainable markets. And it, generally speaking, it will help to unlock the promise of crypto for the better. And you know, regulation is the pathway to building trust, and that underpins every successful market. And without it, crypto runs the risk, you know, of building a house of cards. And in general terms, you can't really point to too many thriving markets that aren't rules-based or governed by some kind of level of regulatory oversight. And you know, from a Gemini perspective, you know, we certainly recognise the importance of having regulators at state, local, federal, kind of national level focus on market integrity and investor protection, and those areas are certainly kind of focused on making sure that firms are kind of delivering the right level of control and support in that regard for consumers in their jurisdictions. That said, the crypto industry and regulators are trying to solve for regulatory uncertainty, including around crypto product definitions. And you know, as a company, we look forward to control for some of that ambiguity and uncertainty. And you know, in the UK specifically, where I'm based, some of the major developments that will impact the entire crypto market relate to the regulatory environment. And you know, and as the crypto market evolves, consumers and institutions need those guarantees that their funds and digital assets are subject to the same stringent protections as other financial products in that financial market. And the Financial Conduct Authority, which is the UK's regulator, is certainly addressing this issue actively. And the regulator so far has clarified how it categorises crypto assets and highlights the controls the firms must implement to comply with anti-money laundering and counter-financing rules in that space. And bringing it back, you know, Gemini's, in our view, these measures are prerequisites for any crypto service provider worth doing business with, be it ourselves or, you know, or any others in the market. You know, Gemini as a construct, we've been in the UK market for about a year now. We fully launched about 8 months ago, but before we went live, we received what's called a electronic money institution EMI license from the FCA. And as I said at the start, we're one of only a handful of firms that have received the crypto asset registration that the FCA now requires all firms offering services in the UK to now receive. And to put into context, there was well over 150 companies that applied for that crypto asset registration, and around about 100 have either had to withdraw their license application or have had it declined in some form. And relatively recently, there's a very public announcement that from the FCA that a particular firm was to be prohibited from offering services in the UK. So, but I won't get too much into that. But so it just kind of goes to show you the importance the regulatory approach has, not just to the regulators, but obviously to consumers, institutions, from the outside looking in, and for firms like ourselves that are looking to offer services. And moving kind of a little bit further from the UK and looking at kind of an EU-wide regulatory context, there is a new bit of legislation, MiCA, which is on the horizon, and that is intended to provide a kind of a unique framework to harmonise standards at a European level. And the goal is certainly to provide innovative companies in the crypto space with a common set of rules and a more sustainable and stable regulatory environment. But all of that said, it really will be important. Crypto is global. It's not, it's not by jurisdiction to jurisdiction. So it will be very important for regulators globally to have a similar standard of approach to make sure everyone's playing by the same rules.
Thank you, Blair. And also, it's refreshing to see how the UK FSA has always been at the forefront of not necessarily regulating for the sake of regulating, but for the sake of creating more market participants in a structured way. And we look here in Dubai a lot on some of the experiences and some of the regulatory frameworks as a benchmark coming out of the UK. And I believe there will be a template for the rest of the world and some of those hopefully success stories. But thank you for that overview. It's interesting to see how technology and market participants and regulator move hand in hand. And when you have a very efficient ecosystem, then things can move very fast. Sandeep, as a Bitcoin expert, if I may say, let's zoom in a bit more on Bitcoin being the grandfather of cryptocurrencies and kind of the reference point of that. And I know you've had extensive experience in this asset class, in Bitcoin in particular. What can you tell us about the current headwinds that Bitcoin may be facing? Not necessarily just the volatility of the price, but there seems to be corporate adoption from one hand, and then disengagement from the other, news about environmental impact. What is going on in today's Bitcoin, and what is at stake when you look at these dynamics?
I prefer to use a word that rather than Bitcoin is the grandfather of cryptocurrencies. It makes it sound very old and boring. I think I'd rather say that Bitcoin is the apex predator of cryptocurrencies. I think I find that much better.
That's much better, yeah. It's the 10-year-old grandfather, so it's a very young grandfather.
And also, I think, whenever we talk about DeFi, we kind of talk about it as if it's external to Bitcoin. And I just want to kind of make a point that according to me, Bitcoin is the biggest DeFi project out there. So I just wanted to kind of lay that out. I think Bitcoin, while it's on its journey to become, I think, the monetary standard of the world, if I may say so, the internet of money, I think it always faces short-term kind of headwinds, for some reason or the other, whether it could be a famous businessman calling Bitcoin is an absolute outright scam, or or some governments banning it, or there are a lot of these kind of narratives which happen, and typically they increase in kind of they are amplified when Bitcoin is on a bull cycle, because when Bitcoin is in a bear market, or in fact the entire cryptocurrency space is in a bear market, nobody pays attention to it. It's only when it's in a bull cycle that all of these things happen. And I think with a lot of these kind of narratives, there are a lot of nuances around it. And I think the way sometimes these narratives are kind of shown, like, for example, you mentioned the environmental impact. I think that's a very superficial kind of narrative out there, where people who've not really spent or gone really deep within the technology, really understand how Bitcoin works, kind of get convinced by these superficial headlines, primarily in the media. Just to kind of give a quick rebuttal to the ESG debate around Bitcoin, 30% of the electricity or the energy that is produced is wasted. Bitcoin consumes a fraction not only of the amount of energy that is produced, but also a fraction of the amount of energy that is wasted. So it really does not have a net positive kind of impact on the energy production in the world. Secondly, in fact, contrary to this ESG impact that people kind of talk about, or the media talks about, or right now people external to Bitcoin talk about. In fact, Bitcoiners, if you go into the think or have a very strong opinion that Bitcoin has a potential to, rather than having a negative impact on the environment, has a potential net positive impact on the environment, because a lot of renewable energy cannot be consumed where it's produced and gets wasted, whereas Bitcoin mining can provide an incentive for renewable energy to develop. So there are a lot of these nuanced discussions around ESG, which I think over a period of time will become more and more prevalent. So I think headwinds will always exist, whether they're regulatory or these kind of narratives, or traditional finance, people from traditional finance kind of not understanding Bitcoin, especially when they get into it. But I think with time, these narratives get debunked, and Bitcoin's adoption continues to grow in spite of these narratives. Walid.
I agree that on the long run, if you want to take a 5 to 10 year view, there's a lot of talk about price of Bitcoin hitting astronomical figures as a consequence of adoption. But thank you on shedding the light on some of the environmental impact. Also seems to take even more momentum these days. We ran a poll shortly. Fiza, if you can pull it off again, but it was interesting to see that although there's a lot of knowledge about Bitcoin and trading Bitcoin, there's very few, there's less adoption of NFTs, and thank you for pulling off the poll. Bertus, I want to come back to you, if you don't mind, with regards to what's next. And we've always discussed and love to discuss the future of some of these applications. DeFi, NFT, ICOs, Bitcoin, all of that are already applications that we have in hand. But help us imagine the world 10 years from now. What are some of the mainstream applications that you think will become mainstream? What are some of the things that we've never thought of that could be actually, realities within 10 years' time? Would love to hear some of your thoughts on what the future might bring to this industry.
Yeah, I think this is a little bit the same view you need to take when you evaluate technology just in general, not only in Bitcoin or in blockchain, particularly now. I think what you see now is obviously a huge generational shift. The tech adoption gets very much mainstream. You get people now in leading positions on the regulatory side who grew up with tech, who have a more open approach towards blockchain and cryptocurrencies. And I think this will just increase exponentially. The adoption is also, getting wider. I mean, if you speak to Generation Y millennials today, I mean, a large part of the pension scheme of a lot of these people is in cryptocurrencies. I mean, this was unthinkable in my generation, obviously, but let alone generations probably that are maybe just 5 or 6 years have been ahead of that. So I think this is getting more and more momentum. In lack of alternatives probably as well, but also because it's getting more accepted. And I think this understanding will lay the foundation for what's built on top of it. So on the technology side, obviously you have a lot of evolutions on the protocol level, so the base layer protocols If you think about it's basically the internet, the TCP/IP of this world in the blockchain that's called a protocol or a blockchain base layer, layer 1. So these infrastructures are evolving constantly. That's, I think, a very important part because that will carry the throughput, the transaction speeds, everything else that is important in order to carry the whole weight of this infrastructure going forward. And even Bitcoin, who has been the first blockchain of its size, and is still the most important one in the world, even Bitcoin is evolving. I mean, I'm pretty sure around Bitcoin, there are layer 2 solutions being created, which will, I think, make Bitcoin become not only a digital gold, what it is today, but also a payment system at some point in the future, like it was originally foreseen in the Bitcoin white paper, by the way. Today, it's just centered around the store of value aspect, which is obviously super important. But I think it will change that in the future as well, with applications being built on top of it. And you will even see decentralized finance projects built on Bitcoin. You already see this with Sovereign and others. So what else will happen? I think just the whole regulatory side will evolve hand in hand. It's not going to be a revolution, but more an evolutionary process in my view. So we're not going to see this just complete destruction of banks, what some libertarians think about. I think this is not realistic. This is not how the world turns, but we will see a constant evolution in that regard. So I think settlement layers for exchanges, for instance, in the future, they will be built on blockchain. So a little bit some elements that DeFi has kind of now proven or is proven in the crypto space. I think the financial services industry will be very wise to adopt them step by step in the future. Obviously, this will take time because now you have people sitting there in decision-making positions who don't want that because this eats away their lunch. And I can understand it from a human point of view, but this will obviously change over time. And then on the user side, I mean, what we've seen a lot in the NFT space, I think that the whole marketing channels of large fan bases and of large organizations in general, or fan-based organizations like in sports, like in music, in arts, I think they will be digital primarily, and digital, I mean primarily blockchain digital, because with these NFTs, you can really create some engagement with your customers that goes beyond the pure channels that we know today. I think the ownership representations will also be on the blockchain. So IP rights, this will all be digitized on the chain. It's way more secure, it's tamper-proof. It's basically, as I've said before, it's immutable, it's auditable, it's decentralized in the sum, right? And the DeFi space as such, I think it's super exciting from a conceptual point of view. I think it needs to get closer to regulation in order to make it really mainstream. I mean, $40 billion, $50 billion sounds a lot, but it's obviously just a drop in the water when you compare it to the whole financial system. So I think a lot will have to change here, but this is certainly coming as well. So I think overall, I'm bullish about the space in general. I think it's going to be a marathon, not a sprint, but it's probably very exciting for every entrepreneur to jump into that sector today, to get educated and to see what he can do in that space, either on the developer side or on the marketing side and community building side, because it's a really exciting vertical.
I agree. And when you think of what a bank is, besides a good balance sheet and some processes, rigid processes, the bank is also protected by a piece of paper coming from the regulator. And when you have all the technologies to deliver the same processes and the same balance sheet, then why do you need that piece of paper? And maybe that's a question to Blair. Blair, do you see this happening if we want to take a 5 to 10 year view? And what is your own view on where this world is going?
Well, look, I think it's, like I was saying before, about primarily enabling people to get confidence, be it consumers, be it institutions, be it whoever, about confidence that the people are taking the right approach, whatever the right approach is. But we've all been, certainly people of my age group and the age groups below that, and there's certainly plenty of them. As we've all become kind of accustomed to, relying on kind of depositing funds. Regimes, that are kind of released and required of them by regulators like the FCA and like those across Europe and obviously the US and elsewhere as well. So I think, for crypto firms in general, it's still a case of making sure that we're working with regulators so that they understand crypto as a concept, as a set of products, and that we can work with them to make sure that regulation and legislation that is being adapted and adopted for the use by crypto firms, it's done so in a way that kind of makes sense and enables the industry to grow. That it doesn't kind of enforce rules or requirements that will contract and constrict the environment from growing as it should do and can do. So I think when it boils down to it, it is always about first working closely with regulators to ensure that they're fully aware of products and services. Because firms need to also be aware of the importance that consumers and institutions get from the likes of FCA licenses, from Central Bank of Ireland licenses, from licenses from the New York DFS or elsewhere in the US. So I think, broadly speaking, there will always, well, certainly in my lifetime, there will always be a close correlation between strong, successful crypto firms and those that remain close and true to what the regulators require them. And naturally, the better relationship, the more kind of bandwidth and the more longevity you'll have. And those that don't kind of recognize that the importance of that relationship will ultimately struggle further down the line because we still live in a financial duopoly effectively. Fiat is still an important part of getting on and off, for on and off ramps for crypto. And the like the FCA and regulators globally still control that. So working closely, staying on top of regulatory requirements is critical going forward.
Thank you, Blair. So no unregulated bank anytime soon.
I don't think so. And when it boils down to it, it's a case of, is that what customers are looking for?
Yeah.
From our perspective,
it becomes a money circle, association.
Yeah, and look, consumers and institutions, from what we've seen, definitely they get a lot of trust and a lot of faith from those that are working closely with regulators, and definitely recognize the comments from other panelists here. And we're evolving so much, and Bitcoin, is what we're going into 12 years now. So, and the evolution of that has kind of grown enormously. And even at Gemini, we're founded in 2014, and from where we were to where we are now, is enormous growth and enormous development. So there will no doubt be a lot of evolution. But the fact of the matter is, regulation has also evolved, and the idea that regulators would be looking to authorize or approve crypto firms, even 3-4 years ago, seems very far-fetched. And now where we are, not only are we being over the next 5 and 10 years, I expect it to grow exponentially further.
To trust in the system, some future applications or adoption of some of the new technologies. We have an interesting question as an international award-winning filmmaker. How can I use NFTs? That's an interesting one. I think NFTs are a gateway of digital rights. So one application that I think could be interesting, if you're a filmmaker or a music maker, you could release directly your music or your film on the streaming platforms and use some smart contracts, NFT, and embed certain rules of usage, or even maybe your bank account statement. This way, you'll get paid every time your film is is streamed. So the NFT application in digital in the digital world is actually extremely promising, and it disintermediates the middleman, which in this case is the film distributor or the label in the music industry. Sandeep, I want to go back to this idea of currency, and how do you think of tying up? So first of all, do you consider Bitcoin as being a currency or an asset? I'm interested in your definition of this never-ending eternal debate in the industry.
I think that's like asking a question whether the internet is broadcasting, is cable TV, or is a newspaper. The internet did not fit in any of the existing rules of information and communication that we had, because the internet played many roles depending upon your use case. We use it as a radio. Right now, we are using it as a communication channel. We use it to consume information. And similarly, Bitcoin provides has multiple roles and really depends upon your use case. When you buy Bitcoin as an investment, I think at that particular time it plays the role of an asset, or maybe at that particular point of time, it performs the role of a currency. The role of, as Albertus said, the role of store of value or an asset is very, very important, and is the first role that Bitcoin's adoption, it's going to lead Bitcoin's adoption. It's only when a critical mass has Bitcoin, and secondly, when we do not have the alternative of a asset which is depreciating in its purchasing power. So right now you go through all these hoops to buy Bitcoin. Why would I use Bitcoin to buy anything else when I have a US dollar or a fiat currencies which are depreciating in their purchasing power? So I think that will happen over the next 5-10 years, but they definitely play both the roles. Bitcoin plays both the roles.
So you believe in the depreciation of the currency as a result of inflation, and in the appreciation of Bitcoin as a result of adoption. So this is kind of the equation.
No, I think the depreciation or the loss of purchasing power of fiat currencies is, yes, because of inflation, but ultimately inflation is because of the unlimited supply of every national currency that we have, which is contrary to what money should be. And this is a very new system. We take it for granted as if this will remain, or because we are born into it, but it's a system which is only 40 years old. It started in 1971. Before that, the world was on a gold standard, which was scarce money for 5,000 years. So I think the current system is broken, and scarce money system is what we are used to. And Bitcoin gives you that opportunity to go back to that hard money, solid money system that the civilization is used to.
Interesting, and that's what makes Bitcoin interesting, because of its limited supply to start with, and the fact that a lot of the Bitcoins have been sold as well. I think estimates about 25% of Bitcoin under circulation are lost. Is that a current estimate?
That is the current estimate. Yes, Walid.
Okay, so if the panelists are going on a laptop hunt in some of the city dumpsters, we'll find some billions in there. Huh? Thank you, Sandeep. I think we may have about 10 minutes before we wrap up the session. Would be interesting in getting some of the questions from the audience, so please feel free to send them. We have a question on hash graphs versus blockchain. I don't know what a hash graph is. Sorry, excuse my audience. Any of the panelists has an idea what a hash graph is?
No idea.
No idea.
Yeah, I just know so far it's a different approach to something similar that solves a similar solution like the blockchain. It's a project that was launched by a team, Hedera Hashgraph, I think was the full name. personally, I'm not sure. I mean, I think there are different ways. To me, it looks a little bit more like a database approach, but honestly, I'm not so familiar with the technology itself to give a sound judgment on it. But at the end of the day, the market will decide what is the right solution. And I think this is what we're seeing.
And just to add to that, I think the person has also kind of mentioned that it's better standards of an operating system. I think it's very important to understand what you're trying to make better. I think especially when we compare other cryptocurrencies or other some consensus mechanisms on a blockchain, and they say that it'll be an improvement on Bitcoin, what are they trying to improve? If they're trying to improve transaction speed or transaction fee, then I think we have far better centralized solutions like Visa and MasterCard, which have massive capacity and extremely low fee. I think one of the main advantages of cryptocurrencies is decentralization. And so if you're doing anything as a trade-off with decentralization, then you have to really think about it, because better could mean many different things to many different people. So just want to leave that thought, Walid.
I see. Bertus, I'd like to learn a bit more about Tezos, if you don't mind. I think the innovation in the protocol is interesting, and maybe we could spend 2-3 minutes understanding its benefits, since you're extremely involved in this protocol. And what made you choose this protocol and adopt it as an investor and an enthusiast?
Well, it was actually in 2017 when the first ICOs already happened, and you heard about all these forks happening on Ethereum and on Bitcoin. If you look today on CoinMarketCap, you have, I think, 3 different versions of Ethereum. You have 4 different versions of Bitcoin, and then came out these entrepreneur from France, Arthur Breitman, with the idea to create a protocol that basically solves that problem, which I believed, at least from back then, and I'm still very convinced about it, that that creates a predictability, some sort of stability for every user of a blockchain. If you know that what you have is what you get, and there is no risk of a fork. Which means in Tezos, what we have is an on-chain governance and an upgradability of the system that happens in a very organized, democratic way. So without getting too much into the technical details here, but it allows you basically to embed the latest evolutions in blockchain technology that come out, or that will come out in the future, to inject it or to put it up for vote amongst the Tezos validators. And Tezos is a very decentralized protocol with over 500 validators around the globe. And if it's accepted, then it will be injected after a certain tested period, basically during the flight, without stopping the protocol. And that's unique. That's the only blockchain in the world that can do that. And I believe that's a very interesting way to adopt new evolutions in an existing setting and an existing ecosystem. The other features of Tezos which are differentiated is obviously this liquid proof of stake. So proof of stake against proof of work, it's you could claim it a little bit more energy efficient, because you don't need all these large mining operations to validate transactions. Everything happens on computer code. And formal verification is actually in the software industry a technique in programming that comes not from the blockchain space, comes from the software space in general, from aeronautics, from the nuclear energy space, which helps you to prove the correctness of code with mathematical models and mathematical calculations, and to basically avoid bugs from the outset. And that's another interesting feature of the Tezos chain. So I think these are the 3 elements, and that makes it obviously very attractive for institutions who have a long-term vision and who have high value transactions to work with such technology.
I see. And there's also a coin associated to it, which I believe the market cap is about 3 or 4 billion. Roughly.
Yeah, it depends on the hour of the day. The markets are pretty volatile these days. But yeah, that's roughly the amount. I mean, the Tezos Foundation did an ICO in 2017, went live into the coin. So the network protocol went live in 2018. This is where the XTZ, the Tezos coin was issued. And the Tezos Foundation basically funds entrepreneurs, projects around the world who come and present interesting ideas, entrepreneurial ideas that want to build up the Tezos protocol, and watch out for way more initiatives that we're going to do in the next couple of months to attract developers and entrepreneurs and encourage them to work with the technology, like hackathons or pitch days and these kind of things. So we'll definitely keep you posted on that.
Thank you. We have a question on interesting question on Dogecoin pricing versus Bitcoin pricing. Sandeep or Blair, do you feel like answering why is Bitcoin at 35,000 and Dogecoin at 0.25 cents?
So I think Ajay has compared two units, and those two units actually don't make sense directly. It's like saying that there are X number of Apple stocks and versus X number of a penny stock, and why if Apple has less number of equity tokens out there, then it should be an multiple of the other penny stock. So I think that's not the right way of looking at valuation of cryptocurrencies. I think what is important is why Bitcoin has value, why Apple has value, because there are certain applications of the company and they do provide certain services in the marketplace which are valued. Similarly, for Bitcoin, the value is that it's a decentralized protocol and it's increasing in adoption because of certain innovation and functions that it provides over a period of time, which Dogecoin does not provide, and that is the reason the market values Bitcoin a lot higher. And the number of tokens is just something which it's like the number of equity tokens it has. It does not matter what the unit is. You could kind of also say that each Bitcoin is divisible into 100 million tokens. So the number of Bitcoin tokens are actually 21 quadrillion tokens. So you cannot really compare them. They're not an apple to apple comparison.
Thank you. That's an interesting, that's an interesting observation. And also, I would add to this that Bitcoin is far more accessible as a coin, given it has ETFs associated with it. It's more present on many exchanges around the world, and Dogecoin's accessibility to a certain extent is less. Let alone the media press and the fact that Bitcoin has been really adopted as the I'm not going to use the word grandfather. I'll probably use the word godfather of crypto. So it is a reference coin. So, but thank you on showing the differences in the technicalities of supply demand and how does that affect valuations. We still have a few minutes and would love to finish this on the dot. I'd like to leave the mic to Blair for any closing remarks. If you have specific remarks, like thoughts you'd like us. Yeah, go ahead.
Sure, absolutely. Look, well, first of all, it's been great to be here, and great. It's the questions that have come through, and very interesting and very clearly very educated and very thought through, and thanks also to the rest of my panelists here as well. I think from our perspective, the thing that is really strong for us, and the message that I've been repeating a lot, is obviously about the importance that crypto is an important part of our the financial market future. I think all of us on this panel strongly believe that, and different we probably all have a view in terms of the pace that it will continue to grow by, and just how quickly it may overtake traditional markets and become a more dominant player. But it's quite clear in the 10, 11, 12 years since it really kind of came into the forefront, that the growth has been exponential in the type of companies that we're seeing coming into the space from an institutional perspective, and the number of consumers that we see growing year on year. Just shows that we're kind of rapidly reaching that tipping point, if not well beyond it, where with the regulators kind of touching on things, that it's here to stay. And with regulators creating licensing and creating tailored approaches to crypto, that's quite clearly the case. And they see that there is a need to kind of understand it, try and help shape it, control it, probably in some jurisdictions more than others. But what we can see is, crypto is a big part of our future. And firms like ours and others like across the globe, the more we can work closely with regulators and also talented people like the rest of the people on this panel, the better the future for crypto will be.
Thank you. Thank you, Blair. I agree with you. It is now a part of our financial system and beyond, and therefore we should more and more pay attention to it and pay attention to its adoption and usage around the world. And I look forward to the next 10 years of crypto, of the crypto adventure. This comes to the end of the hour. I'd like to thank the panelists for your participation and the audience for the engagement and the questions. This is informative, and thank you, TiE, for organizing this event. I wish you all a pleasant evening.
Thank you so much.
Thank you, Walid. Thank you to all of you. Have a good evening.